Hello everybody, Corey here. We're going to go over the trades and holdings for Monday, June 10th. This will cover all the YieldMax funds with the exception of Alti. So just a reminder, I'm not a qualified licensed investment or financial advisor. I'm just here to gather the data, give it to you, and so you can use that with your other research and stuff so you can make more informed decisions. And a reminder that YieldMax ETFs are extremely risky, so please make sure you've done your due diligence and really research these before you start jumping into them. Make sure you know what they're all about. Join some discords, talk with some people about them, good and bad. I mean, you always got to listen to both sides, right? So, before I get started here, just a reminder, we have SNOY. It will be in here, so we'll show that, the trades that they put on today and the holdings in preparation for tomorrow. So it will start trading tomorrow. And YBIT, I've been doing that separately since inception because it's not a single stock ETF, even though it currently only has a single stock in it. But in order to, I guess I've already fully made the decision at this point, but to reduce some of my workload, I am going to add it here with the single stock ETFs until the time that it actually has multiple ETFs within it. And then I will take it back out just like I did with Alti because it has a lot. So, but until then, as long as it has one, because it's been out for 6 or so weeks now, and it's only had one in it this whole time, and it would have been a lot easier if I'd have just left it in this workbook, and done it from here. So I have moved a few things around. If you're new to this, or even if you're not, just the flow, because I did move that, or I added it to the bottom. But we go through all day long, so all your normal single stock ETFs. And then once I'm done with that, and they're in alphabetical order, then I do the short, which at this point we only have Crash. And then right after that, I've added YBIT, since we're going to be adding that in there temporarily. So you please feel free to fast forward to whichever ETF that you're wanting to look at. My my videos won't be bookmarked. These videos are basically a one and done, right? That it takes, it's just not a lot of time to be able to spend on doing stuff like that. So it's just much easier if y'all could fast forward it. I'd greatly appreciate it. But just to let you know the order of that, and then just let you know for those of you who've been here a while, that YBIT will be at the bottom. So I have zoomed this out to try to keep all of this on one page because I won't be going to the trades tab today because we didn't have anything closed out. Everything will be on here. I did on my phone test it out, and if I zoomed in a little bit, because like you're almost seeing two ETFs, but we're only going to talk about one at a time. So if I zoomed in a little bit on my phone, it made it a little bit bigger, and I could just see the top portion. So let me know though if y'all have. I know I ask this sometimes, then I forget when I don't do it a long time. I don't know if this view is okay or not. But if it is, then maybe I'll start doing them this way. But if it's not, let me know because I have no problem especially if you're new. I'll zoom all the way in. I'll show you it this way just in case you are new. You can see it both ways. And then I'll scroll over. Now, actually, I used to do that. I don't do it that much anymore. I usually at least try to get all of that. And then if we have a trade, I'll scroll over. I'm a little scared to do it this way and you'll not be able to see it. How about I'm not going to do it this way, but you tell me if it looks okay this way, then maybe I'll do it next time. I just hate to do it and then have you not be able to see it. So let me just go back to the way I would normally do it because I don't want to waste anybody's time or you get frustrated because you can't see it. But yeah, if anybody tells me, no, don't do it zoomed out like that, then I won't do it. So just make sure you put it in the comments below, please. All right. So we're going to start off with AIYY. We can see there's no trades actually for these two. So our short call for this week is $32. We are 2% underneath that short call, which in this case is only 64 cents. So keep that in mind. And then, of course, if you're new, the possible upside over there is just a calculation that there's a possibility that this could go up for the short call itself up to 26 cents before it caps out. Well, I don't have one like that for the synthetic. And then if you're not sure how these work, also normally, right? AI. I always use the example for AIYY, and it's never normal. But you normally want your stop price to be between the synthetic price and your short call. So above the synthetic and below the short call. And the opposite if we're talking about the short ETFs with puts, like Crash, for example. So so here, that's why you see green. It's good, 2%, because we're under at 2%, so that's good. For the synthetic here, we have 32.51. It's below the synthetic. Remember, we want it above it, so red is bad, so it's below at 4%. Of course, in this case, there's no way to be between the two. Well, there is. It's just not the way we would want it, because the short call is actually lower than the synthetic dollar amount. So I won't talk about synthetics in here, but do keep in mind these and watch them. And I say that because I used to not really pay too much attention to them, and then I've seen them, wreak havoc on some of these ETFs. And they've lost, AIYY being one of those, losing $5 or $6 a share because of the synthetic. And then having to pay lots and lots and lots of money to close it out, millions of dollars. So anything else? And then AB, market value per share price. So we have the market value in column T for the overall fund, but all of these are all different places. So I've tried to break it down to the share price itself. So to a stock. So the stock price in this example, AIYY, is $12.92 at close today. And here you can see in column AB, the synthetic is actually bringing the price down 42 cents a share, and the short call is negative 23 cents a share. Just so you can see how it affects it. That's pretty much it. And then, of course, on the left hand, I don't normally do that. It's been a while since I've fully explained everything here. I used to read on the left side those stock prices too and our changes, and for the underline and the YieldMax, and then I stopped for time's sake. But it is on the left-hand side. And then, of course, we have the total of the market value broken out by short call and synthetic if you wanted to see those totals without adding them on the right. And then the net assets and the outstanding shares for these are there as well. And then if you don't already know, we also do a daily roundup, but it's not into this much detail. And you get to see some things, like price changes and comparing between, who did better, and all those different things. But it's not as in detail as this, but it is a daily roundup if you don't know about those. But anyway, let's move on. All right, so AMDY, we already said there was no trades here. They have two short calls that expire Friday, 172.50 and 175. We're below those 7 and 8% currently. Now, I don't know what happened to this stock today, but as soon as the market opened, it tanked. It got to around 160. Apparently, it closed also around 160, but I did see it up to anywhere up to 164 at some points today, but I guess it still ended back down. If you're new, I usually listen to a podcast about trading all day, but work was extremely frustrating today, trying to figure out other people's errors, and I couldn't do it. In something like that, I have to have a clear mind, so I couldn't really listen to what was going on today. So I apologize, I don't know what's going on there. I'm sure one of you know, so feel free to drop that in the comments below. You can see up here now, this one a little different here for AMD. why it has two different short calls. So you can't just add up the numbers on the side necessarily and say, oh, it's going to go up $1.30, because what's going to happen is once you go over that first short call, then that one's going to start going negative. So it's going to start canceling each other out. And of course, it always depends on the number of shares and everything else. So in the case of this, we have about a third of the shares at the 172.50 strike price, and we have like 2/3 at the 175 strike price. So maybe around 60 or so cent upside for these short calls. It's just swinging off the hip, just a guess here. And it just depends on whatever the market value of everything and how things work. But yeah, we're gonna move on. AMZ. We had no trades today. We have one short call that expires on Friday with 190 strike price. We're below that 2%, which is only about $3. We have about a 34-cent upside possible for the short call. And again, another thing I forget, this is why I need to do a video that just talks about this, is that just because the short call is only going to go up to a certain amount doesn't mean that the synthetic cannot bring the stock price up more. It can, and of course we had some examples last week where we could show where some of them, the synthetic made it go up significantly and some of them not so much. So it's not always the case, but it seems, since I've paid attention, it seems to be the majority of the time it'll go up. Sometimes it'll only be a few cents, sometimes it could be more. So we're going to go on to Aptly here. We have one short call that expires Friday, 202.50. We're currently below that by 5%. They have something going on. I did hear this. They have like their weekly showcase or whatever this week. I heard them say that most of the time they tend to actually drop during this event. So I don't know. I also heard them say that everything they introduced today didn't seem to be anything new. So I don't know, but you can see that they did drop over $3.50 today. So, but we do have a possible upside of 80 cents there for that short call. So if we could get up to that 202, we could possibly see $18 by the end of the week. I'm not sure. I don't know though. Which then reminds me, we also have the how many days does it take for these to recover from their dividend on that daily roundup as well. All right, so Coney, we have one short call that expires this Friday. We have a $280 strike price, so that's good. We have room for improvement. I can't recall the last time, or if Coney ever got to 280. I don't even know if it ever has historically. I don't remember. I know it's been up to 260, but I don't remember it above that. But anyway, we have a possible upside of $2.40 because there is a $30 range between today's stock price and the strike price. If we move on to Dizzo, they added 150 contracts here to the synthetic and the existing short call. So we have 104 strike price for this Friday. So unless it states otherwise, and I pointed out, all of these will expire on Friday. There could be a possibility of one or two being next week, but most of the times, most of these will be this weekend, this Friday. So I don't have to keep saying it. But we're only under that strike price of the 104 strike price by $1.26. Oh my goodness. All right, so we have an upside of about 22 cents here for the Dizzo share price for the short call itself. So Phoebe, we have one short call, $512.50. We currently only underneath that 2%, and that's exciting. I did not realize that Meta got above $500 today. So it went up $10. All right. Of course, it only went up about 25 cents. But, so I don't know. Right now, we're showing it could possibly go up another 37 cents, but I don't know. We'll see. We're only $10 away, and this one was $10 and only went up 25, so it may not go up that much for the short call. Again, if it goes over, it could possibly go up more for the synthetic. I just want to make sure I didn't miss that one. So GDXY, we didn't have any trades here. We do have 3 short calls, though. We have 35, 35.50, and 36.50. We're below those strike prices by 3, 4, and 7%. The majority of our contracts are at the $35 strike price, our lower one there. So we have about a 44-cent upside there for GDXY. Then we have GUI here. They added 165 contracts to the synthetic and created a new short call at 177.50 strike price, which were only 1% below that, so about $2.49 there. And then we also have 180 and 182.50 strike prices for short calls as well. We're underneath those 3 and 4%. So it looks like the majority of our contracts are split between those two higher amounts, the 180 and 182.50. So we have roughly about 23-24 cent upside here. If we move on to JPMO, they added 25 contracts to the synthetic and to the short call with a 202.50 strike price. We are currently underneath that one, 1% or about $3. Then there's the $200 strike price that we're only under. Okay, so we went down a little bit. So we're only underneath that about, was it 39 cents? But on the good side, and the good news is our synthetic is $200 strike price, so we're going to get up above that synthetic. So if we could stay right here for the week, I think would be pretty good. All right, so let's move on to Murni. They added 95 contracts to the synthetic and created a new short call at the 152.50 strike price because the stock did go down. So we're 3% under that. Then we have the 157.50 strike price, which we're currently under by 6%. Looks like we have a possibility of about $1 upside if Moderna can go up. Of course, if you haven't been following this, Moderna went way up, or went up really quickly on some news and then has been slowly coming down. Now, it hasn't come down as much as I thought it would. So I haven't been looking at the chart, though. Maybe I should. But anyway, we'll move on to MSFO. They added 40 contracts to the synthetic and created a new short call for this week with a 432.50 strike price because we're already over the other one. So we have the 432.50, we're underneath that by 1%, but then we have the 427.50, which right now we're over by 37 cents, and that's the majority of the contracts. So not looking for any upside here with the short calls, but maybe, I don't know, since we're getting up there close to the synthetic strike price, then maybe the market value for that can go up, given MSFO a few more cents. But, well, we also have the other one, but it only has 40 contracts. You didn't get much out of that one. It looks like the stock only went up 6 cents today. Wow, yeah. It only went up. I wonder where the stock price was all day as far as things, because it went up 6 cents MSFO, but Microsoft went up $4. Of course, we could see that on Daily Summary, which I already did the video. I just don't remember it off the top of my head. All right, so then we have Misty. We have 195 contracts. So my new here has got to be wrong. Let's look. It's just to make sure. I didn't see that, but obviously that wouldn't have made any sense because we didn't close anything out. And we only have one. So let me just look, make sure I'm not losing my mind. And then I don't know how that one formula didn't get updated, but all the rest of them would have. Yep, 1550, that's what I thought. So 1715. Now that one is new. I wonder why it came across though. Unless this one had popped up after the holdings had already come through and I didn't change this formula. because most of these I had already copied and pasted, so that's probably what happened. I know it doesn't really matter, but paste. All right, so they added to the synthetic 195 contracts, and then they created a new short call. So wow, I didn't realize it fell this much. I guess that was on Friday. Oh, that's right, everything fell at 2 o'clock. 2 o'clock to 2:15, it was a free-for-all. So yeah, so they have a new short call here, the 17.15 strike price. We're underneath that 7%, which is like $100 and something, $115. And then we have the 1800, 1820, and 1850. We're underneath those 11, 12, and 14%. So the majority of our contracts are sitting at the $1,800 strike price. So we prefer for it not really to go above that one. But if we look over here, we look about, $2.75 upside for the short calls. So that could get us back up to about $34. And then maybe we can continue to go higher based on the synthetic if we can get back up there. Man. All right. Nephle. We have short call 650 strike. We're only underneath that 1%, which looks like $5.50 there. So we only have about 14 cents to the upside for Nephle here for this short call. And then we have NVIDIA. So yeah. So there's an error here. How did I not catch this last week? Oh, well, I know how I didn't, but let me check real quick here. Sorry, let me hide all the raw data so I can get to stuff we can actually understand. So we're looking at, which one we were looking at? Oh, that's right, because the stocks split. So they'll fix it though. And I'll show you what I mean. And that's one they all say new because it's a stock split. But you see, yeah. So you see here, one says 113 and one says 113.01. So because this they're split like that, the shares are split. But of course, they're all going to show new because of the split. And but you see how down here, the put has a cent behind it and the call does not. You can see that on all of these here. They're like that. And so I guess this one they didn't after the reverse split. I don't know. They haven't done that one with the cent behind it. I don't even know why exactly. And some of them they do, and some of them they don't. I think it might have been Ulti that, and when I say some, like the same category, I think Ulti they didn't do the cent. So I don't know. But it's okay. It's no big deal. It's just you have to add these two together, which is 55,550, which is what this is. It's just broken up on two lines right now. But we have 3,800 additional contracts here. They created a new short call at the 126 strike price, and then now we have a 125. So let me just go over and let's really look at this one, because now I'm going to have to, like all of us, that's why I hate when they do splits, whether it's a, regular, reverse, whatever, because then I have to get my mind wrapped around the new prices. And then, especially if you buy stuff, I was like, well, what was it before? I remember when Tesla did that reverse split. It's like, okay, it was this, and now it's, yeah, anyway. I'm sure some of you out there will probably do that for a bit with NVIDIA as well. So we closed today at 121.79. It looks like based on Friday's price adjusted was 120.89. So it means we did end up going up 90 cents today, which I figured it wouldn't. I figured it might go up at first and then go down. I don't know. We'll see. I know they see that the synthetic is down to 113. So that gives us a little room here. We had the 125 and 126. So we're underneath both of those 3%. Majority of the contracts are at the 125 though, so we only have, $3.21 to that, which gives us, it's surprising, like, wow, that gives us 70 cents. But again, there's so many shares now here compared to, there's just like 51,000 shares. It seems like a lot. I mean, it is a lot. But anyway, so we have a 70-cent upside, which would get us to about $30 there for the short call. But anyway, I'll move on. It's just something different there. So OARC and PayPay there, we don't have trades. So we have a short call here for OARC, $46. We're underneath that 4%. And possible upside of 43 cents for the short call. And then for PayPay here, we have the $69 strike price, which we're only under $1.91 right now, which I'm surprised because I know a bunch of things started falling today. Oh no, it was Apple, I guess Apple Pay talking about, or Apple and their convention thing about getting rid of the option to pay with PayPal because they have Apple Cash or whatever. And then, so I thought the stock would go down. It didn't go down much. But anyway, $69 strike price underneath that 3%. Looks like a possible upside of 50 cents here. And then we have SNOY here. So obviously everything's new because this is a brand new fund, and tomorrow will be the first day for it. But you can see their trades to get it started and the prices that go along with those there. Yeah, and these will update once we get all the prices and stuff in here good. But man, Snowflake fell today. I feel like I knew that. Actually, I did know that because I bought a share to try to DCA down some on mine. But I think I bought mine at 127. But anyway, yeah, so it looks like we have a synthetic at 130, which we're now below that $3 already. And yeah, they split the shares between two different strike prices for the short calls, 131 and 132 strike prices there. And then, of course, we're not going to have any possible upside because we don't even have a stock price yet, right? That will be tomorrow. And then they'll get a money market account and they'll do treasuries and all of that in due time. But this is to get us started at the normal 2.5 million and 125,000 outstanding shares. So that gives you your first look at SNOY. I just so love that ticker name. Anyway, I'm easily amused, right? All right, so then we have SQUE. They have 175 contracts. Again, this has got to be because, sorry, I was trying to find somewhere to, it's got to be because I had saved a bunch and then apparently some more trades had loaded after the fact. There we go. Let's see if we have any more of those issues. We do not. All right. So obviously they added to the synthetic that they had 175 contracts, and they created a new short call here. They did not. That's also added too, and you could tell because it has 4,900. which I didn't even think to look on those other ones. Again, this is really just a note for me to help tell you if it was a new one or not. It's not a huge deal. I'm just a little OCD there. Oh, sorry. But anyway, yeah, so 175 contracts added to the synthetics and the short call with the $66 strike price, which we're currently underneath 3%. And then we have a $70 strike price, which we're under by 8%. The stock did go down some today. Just to note, majority of the contracts are at that $66 strike price. Looks like we have a possible upside for the short calls of about 47 cents. And then we have Tesla, no trades. We have 2 short calls that expire Friday, 182.50 and 185. We're underneath those by 5 and 6%. Majority of the contracts are at the $32. Are at the 185 strike price with 32,000 contracts, and I don't know, possible upside of maybe 60 or something cents there for those short calls. Yeah, and Tesla dropped here about $3.50 today, and I was actually listening to some stock analysis today, a possible downside for Tesla, even possibly down to 166. So I found that interesting. But anyway, moving on down to Zomo, they added 50 contracts to the synthetic and the short call there. We have a 115 strike price, which we're under 2% or $1.92. Looks like we have possible upside there of 29 cents for Zomo. Then we have Crash here. Our short put here is $170, that strike price. We are currently above that by 2%. And so remember, this is going to be the opposite of the other ETFs. Yeah. And then I obviously don't have a possible upside for this one because this one is different. But then I added YBIT down here. I talked about at the beginning that I'm going to leave this. I'm going to add this here and leave it. Well, I already had it. I just moved it up, and I'm going to start actually using it here until YBIT has more than one ETF. But right now, we only have the one, which is BITO. So we have the 3 short calls, 27, 27.50, and 28.50. We're currently at 26.23, so we're underneath. The strike price is underneath. The stock price is underneath the strike prices by 3, 5, and 8%. The majority of the contracts are the 27.50 strike price. I don't know, so we might be looking still around somewhere about a 60-cent upside here, which would be good if we could get up that far, but it seems like, I don't know, it just keeps going down, down, down. So not sure how this is going to go, but our synthetic position here expires next week, and we are $10 or 27% underneath that strike price, and the synthetic is bringing the stock price down $7 a share. And it's like, oh, how is that if it only came out at 20? Basically, what ended up happening is they sold this at that $36 strike price so they could get a bunch of money back for it. We've never actually were around there because they usually buy around the actual stock price, right? And then they brought a lot of money into the fund. So basically sitting there in cash, I guess, at this point to pay that off if it's not going to get up, because you can see right now it's going to cost us $7.8 million to close that synthetic out. But anyway, all right, that's pretty much it. I feel like I talked more in this video than I've been talking lately, but I will let y'all go, and hopefully y'all have a great day tomorrow. Bye.